Hey everybody, excuse me, this is Greg Gossett from Gossett Trading and Mentoring Live. How's everybody doing? Today is Friday, November 15th, 2019, and we are now in the final hour of the trading day and the final hour of the trading week. So I mention this each day, but I think it's important. I do the majority of my buying and selling, entering, exiting my positions at the end of the day. I feel like the prices that are as close as you can get them to the end of the day, right near the close, are the most valid prices. During the day, you have the day traders, you have the algorithms battling it out. I consider it a lot of noise. In the last hour, and in particular, basically the last 5 minutes, the large financial institutions, the market makers come in. They're the best equipped, they have the best knowledge, the best technology, and I believe they move the prices to where they really think the valid price of the day is with size. And again, that is why I make the majority of my buying and selling decisions right there at the end of the day, if possible. So, hey, John, good to see you. John says, please consider add BRKB to watch list, almost like an ETF of value stocks, Berkshire Hathaway. Yeah, that's a good idea, John. Steve Burns has that in his watch list as well, and I think you're absolutely right. I think that would be a good addition. Evan, how you doing, Evan? Good to see you. Thank you for coming. Appreciate you being here as always. Steve Burns, hey buddy, what's going on? Congrats on the legendary overnight SPY trade. Yeah, it was a good SPY trade, wasn't it? The overnight, and it is the legendary trade at this point. So yeah, it's been really good to us. Thank you, Steve, for coming today. Appreciate you being here as always. Watched your video newsletter last night, and I saw in there on Etsy where you Etsy and app? No. Etsy and Disney where you're talking about the third ATR channel, the Keltner channel. So thanks for that, and thanks for mentioning the podcast. I really do appreciate it, and thanks for being here, bud. By the way, a podcast came out today where Christopher Uhl interviews Steve, so I'll be sharing that later, and I'm looking forward to listening to that on my walk today. Hey, Christopher, good to see you, sir. Christopher says, evening all. Thank you for coming, Chris. Hi, Jess. Jesse says, hi, Greg, and the rest of the gang. Good to see you, Jesse. Oh, sorry. There we go. Good to see you, Jess. Hope you're doing well. And keep in touch, please. Like to see what's going on with your trades and so forth. Jackson, hey, buddy. Good morning in Australia. Hope you had a good night's sleep. Morning, all. And yes, nice little profit on SPY. Did you take that, Jax? Murat says, hi, Greg. Had a great trading day today. I try to be conservative on Fridays, but today I just nailed it. Oh, perfect. You'll have to tell us what happened. Steve Burns says, I like how John thinks. I agree 100%. Okay, sounds like a deal. We will put BRKB. And as a matter of fact, let's see. On this one, I think is it this? Nope. BRK. I think on mine it's underscore B. Yes. All right. So I will definitely add that. Just looking at it today, a little extended, like a lot of these stocks are going to be, but I'd like to see it come back into the value zone here. But I don't see anything today, but I definitely will add that. Well, here, let's just add it right now. BRK underscore, oops. BRK underscore B. All right, there we go. Officially added. Officially added. All right. Jesse says, that is crazy that you said that, John. I just added that to my watch list yesterday. I also added XAR to my list, aerospace and defense, ATR. Oh, okay, good. Jackson says, I did take the SPY. Congratulations. Nice. All right. Well, listen, big day today. We had some comments, positive comments, possibly that the The trade deal with China, or the first phase of the trade deal, may be close, and that is good. The market seems to like that. The Dow's up 200 points, about 0.75%. The Nasdaq's up 53 points, 0.6%, and the S&P is up about 20 points, 0.6% as well. And you know, I was reading in Steve's private Twitter feed, and if you are a member of like his video newsletter on newtraderu.com, you can correspond back and forth with Steve during the day on his private Twitter feed, where he talks about what he's looking at, what he's going to buy. I like to check in there, but he did mention something interesting. I'm kind of paraphrasing, but you know, he said the more we go up into this possible first phase trade deal, the more likely it will be a buy the rumor, sell the fact situation. And I couldn't agree more. You know, it's kind of the carrot on the stick right now. And you guys know about the buy the rumor, sell the fact, buy the rumor going in. But when the fact actually comes out, that's when people sell into it. And I couldn't agree more with that, Steve. So Murat says, oil was ranging this morning. As soon as it was outside of its range zone, I shorted 2 contracts and it went to my target. At the same time, I went along with 4 contracts at the bottom price. Murat, man, he gets the shorts and the longs. And honestly, that's the funnest feeling in trading, is when you short, cover for a profit, go long, and then it goes back up. That's like the best feeling. I just closed 2 of them 1 hour ago. 2 other contracts are running right now. As I see it, the position is up 3.2%. times 10. Fantastic, Murat. Murat's like the oil specialist. So listen, the plan for today, as usual, first of all, we're going to run the U.S. legal disclaimer, get that out of the way. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, what methodology I was using, what my thoughts were when I bought them, what the plan was, and then how I'm going to manage them going forward. We're going to come back. We're going to talk about trader psychology, or some trading where's the wisdoms, or some tips, helps. You know, all this kind of stuff is important. You know, I'm a big proponent of trader psychology. And when I say trader psychology, what I really mean is keeping your emotions in check. What I really mean is following your plan, not letting your emotions get you all riled up, get your emotions amplified, and then you deviate from your plan, make impulsive buy or make an impulsive sell, or get out, you know, not be patient enough to the outside or be too patient to the downside. So these things are very important. It's the skill you need to learn. No, people don't think about that. They focus completely on the technicals, and that's fine in a perfect world if everybody followed the plan, but people don't follow the plan. I mean, it's just as simple as that. They deviate all the time. And so, you know, work as much as you can on trying to discipline yourself, work as much as you can on trying to follow your plan, and realize that it is a skill. And if you feel like you're deviating it, just think to yourself, oh, I guess I'm not as skilled as this as I thought. And the more you follow the rules, the more you follow the plan, the more you're going to get those pathways ingrained in your head, and the more you're going to continue to do it. So, all right, after that, we are going to go through my watch list. We're going to go through each stock one by one. We're going to look at the support levels. We're going to look at the resistance levels. We're going to look at all the technical indicators like RSI and MACD and moving averages and ATR channels. And the way that I view the market is when I see an indicator that triggers, I look at that as a group of buyers. And if you want your stock to go up, you need to be in you need to be with as many groups of buyers as possible. Therefore, when I look for setups, I really like to look for a confluence of setups, because if one group of buyers will help you make your stock go up, if you can find a combination of indicators lining up at the same time, you have several groups of buyers coming in. And in my opinion, I believe it improves your chance to have a winning trade. So we'll go down through, we'll take a look. If something looks good after first review, I'll check it. And then at the end of the day, we'll go through the ones that I checked with a little bit finer tooth comb, and we'll take into consideration correlation. Do I have other stocks? Possibly. Do I want to add another stock that's in that same industry, or so forth? We want to look at risk to reward. You can have a great confluence of indicators, But depending, what you use as your risk to reward parameters, you might have a great setup, but the risk to reward may not look good. So it's a two-part method. One, identify a good setup, ideally with multiple indicators lining up. Then if you have that, then you have to look at your risk to reward, depending on what indicators or levels you use for your risk to reward, and just make sure that you have more reward than your downside risk. It may go down way more, it may go up way more than you think, but you have to have an educated guess based upon your support and resistance levels to make that determination whether or not you have a good risk to reward. So, and then if we find something that meets both of those criteria, then at the end of the day, I will go ahead and take a position in that. And then after the market closes, if anybody has any questions about what I discussed today, please let me know. Don't be shy, just put them in the chat. If you have any stocks that you'd like my opinion on, I'm happy to give that to you. Just type them in the chat. If it's something pressing for today and it's time sensitive, do me a favor, put a little asterisk by it or something so I know it's time sensitive. Otherwise, if I don't see that, then I will just talk about those symbols after the market closes. But if you feel like there's something that really would be helpful for the group and we'd like to see it before the end of the day, please let me know. Wayne the other day pointed out Chipotle before the end of the market, and I really like the setup. It was right here. It was back on the 11th. We had, let's take a look here. Yeah. It was back on the 11th. So here we went under 30 the day that we bought it and went over 30, went under the third ATR channel, over the third ATR channel, bounced off the 200. Perfect, right? Just perfect. So I did go ahead and buy this at the end of the day, gapped up nicely the next day, even went up higher, hit some profit targets. It rejected the 50 RSI on that particular day. So I just went ahead, one day trade, got out of it. But it was a great trade. And that was thanks to Wayne pointing it out to me before the end of the day. So Wayne, I owe you because that was a sweet trade. All right. Okay, so that's that. Jackson says, I was going to say, Murat is oil. Well done, though, sir. Yes, absolutely. Murat's had some monster trades. Murat, I used to work in oil and gas, but I never traded oil when I was working there. The thing I like about oil is it is about everything: trade, politics, geography, human emotions. 100%. 100%. Jesse said, hey, Steve Burns, wanted to tell you that New Trader U is fantastic. I love the ability to send PDFs of articles to email. I have many of them printed and keep them on my desk. Fantastic, Jess. Yeah, New Trader U is, I'm telling you, it's the best. I mean, he has some really great articles, free articles right here, New Trader U. He has the video newsletter. This is what I subscribe to. He has some price action and trading courses, e-courses, which I have taken all of these, I believe. Yep. And just great articles about things. And here he is. If you haven't subscribed to him on Twitter, at @SJosephBurns. But New Trader is fantastic. And I subscribe to this newsletter. I watch it every time it comes out without fail. Well, that's not true. The other day I did fail to watch it because I taught lessons and I taught the podcast and I talked about trading for about 5 hours. I couldn't take any more trading that night, but I did listen to it the next day, and I did watch his newsletter last night, which was really good. Okay, Dr. Long, hey, lost today, but was very patient and stuck to my plan. Bought cheap puts and they are going to zero. Okay, well, we're going to win and we're going to lose, Dr. Long, right? For sure, right? But the important takeaway there is you stuck to your plan. And that is so important. Everybody thinks there's this holy grail to trading, one indicator that's just, going to make you super rich. And it's not true. It's not true. Where you're going to get in trouble is not following your plan. So congratulations. Proud of you, Dr. Long, that you followed your plan and keep doing it. Frank says, hi, Greg and all. FWIW. The news The news claims China is interested in buying pork from the U.S. due to a severe shortage. Any thoughts? Uh, I don't know, Frank. I guess you'd have to look at the pork chart and make sure that it makes sense from a technical standpoint. That kind of goes for anything. You can hear something on the news that looks good, looks great, and then you turn to your chart. Maybe the chart's not showing you that it is so good or so great, or that from a risk to reward standpoint, it may be already priced into the market. And if the news is out right now, I'm sure that it's priced into the market. Not sure though. If you can find an ETF or something about pork, let me know. Jackson says, I'll check out New Trader You soon. Moving houses. Oh, you're still moving, but once settled. I have Squiz since I have since Master Gossett recommends. Yeah, thanks, Jax. But it is a really good website. Marcos, hey buddy, good to see you, sir. Let me know if there's anything I can help you with. Steve Burns says, thanks, Jess. Holly is my web developer. That PDF options was her idea. Fantastic. All right, well, man, I haven't even run the U.S. legal disclaimer, have I? Or have I? Now I can't remember. Okay. I'm going to run it. So hang. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay. I got to get my head on straight here. I'm discombobulated. Jackson says, sorry, paraphrasing Star Wars Master and Apprentice, slight dull, dry humor from down under. Legal it up, Greg. Okay, good. I like dry humor. I just wasn't sharp enough to catch it. But now makes sense. Hey, by the way, guys, so I was telling you about the podcast that came out today where Christopher Uhl interviews our friend Stephen Burns, and it's right here on YouTube on Christopher's website, Christopher Uhl 10-minute stock trader, right here. So you guys should check that out. I'm going to put that in the chat right here. There's the link. So I haven't listened to it yet, but I'm really looking forward. Ultimate Risk Management Guide. Okay, there couldn't be anything more important in trading about managing your risk. There's so many books out that talk about technicals, right? We've all heard them, talked about trading philosophy. Of course, it's important, but Steve has a book out, Ultimate Risk Management Guide, that really talks about risk management, and you guys know me, it's hugely important. So anyway, check it out, and let me see right here. Oh, right here is a link to Steve's book that's on Christopher's page here, and it's right here on Amazon, The Ultimate Trading Risk Management Guide. So I've read this, it's really good. It's on my recommended list too. So check it out, guys. Seriously, check it out. You can't read enough about risk management. It's what trading's about. It's what trading's about. So I'm glad Steve wrote that book and really focused on, I think what's the weakest part of most traders' approach. Okay. Okay, thanks, Murat. I'll take a look at that after close, if that's okay. I'm running behind. All right, here we go. All right, well, here we go. First position is Dollar Tree. I did buy Dollar Tree back here on the 13th of November. I bought it because it bounced off the 30 RSI. It reversed back up, closed above the 30 RSI, washed out or went below the third ATR channel and the 100-day channel, closed back above, and cherry on top, we had this beautiful V1. Here is day one, here is day two. Day two washes out day one, washes out the low by at least a quarter ATR, closes back above. I mean, if you're not going to take that trade, I don't know what trade you're going to take. The only thing that would make it better is if we had a recent low over here. We had some recent support over here. That would make it the trade even stronger. But as it is, V1 under the third channel, closed back over the third channel, bounced right at the 30, closed over the 30, washed out the 100-day, and closed back above. So anyway, so far it's been profitable, not hugely. We did hit one profit yesterday, got close to hitting one profit target today. Haven't quite have not quite reached it, but the day's not over. We have not moved one ATR for my entry, so I'm not going to be implementing any trailing stops. My initial stop here until that point happens is a close below the washout day. You can see the bottom to the top. Halfway of that should hold some support from a Fibonacci standpoint, 50% Fibonacci standpoint. So if we continue to go higher, I'll start implementing some kind of trailing stop. If we, Monday close back under halfway of this bar, that will be my initial stop. But hopefully we can make it up a little bit further so I can start implementing a trailing stop. And a trailing stop would be possibly a close below the previous day's low. If it got up to the 50 RSI and rejected it, that would also be a reason for me to get out and cut my losses. Lock in my gains. Ugh, man, I hope that wasn't a Freudian slip, right? To lock in my gains. Did you hear me catch that? I was like, oh, sacrilege. So anyway, so far so good. So far so good. Okay, the legendary, world famous, universe famous end of buying the SPY at the end of the day. So this is a separate methodology that I use. I buy the SPY each day at the close, and I sell it first thing the next morning. And there are no technical indicators involved in this approach whatsoever. It's strictly data driven, but this is from Lizanne Saunders at Bespoke Invest on Twitter. With this back test, there was two options. Option number one was you buy the SPY at the open each day and sell it at the close each day, every day from 1993. Buy at the open, sell the close. Buy at the open, sell the close. If you would use this approach for all your trouble, all your work, all the calories you burned, you would have actually returned a negative 13.9% return. However, if you did the opposite, which is what I do each day, I buy the SPY at the close, sell it first thing the next morning. Buy at the close, sell the next morning. Buy the close, sell the next morning. Every day from 1993, if you use the second option, you'd have actually returned a positive 634.2% return. So option number one, negative 13.9%. Option number two, positive 634.2%. It's pretty clear which option back tests better and which one I want to use. So past performance is no guarantee of future results. That's true, and that goes for any trading approach. But if you have a valid trading approach that has an edge, it does not mean it's going to be immediately profitable. But in the long term, if you really do have a statistical edge, you should have a gain. If you stick to your plan, you position size correctly, and you do it for the long term. The blue line here is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see the blue line is a clear winner. There are ups and downs. So it's important to position size, not load up the boat, because you may have loaded it up right here, and I'm sure somewhere in here you would have given up, right? But remember, think about trading for the long term. Think about each trade as the next trade of one trade of the next 1,000 trades. Don't get too excited. Don't get too depressed on any gain or loss that you have. you have to be in it for the long term. And to be in it for the long term, you have to temper your emotions. You can't just burn yourself out every day. Oh, is it up? Oh, is it down? Is it up? Should I not? Maybe you can do that for a while, but you'll burn yourself out. You should try to take the Zen approach to trading where, each gain, each loss doesn't fire you up or get you too depressed, and really think about trading for the long term, right? Think about the long term. If you would have used this since 1993, you've done fantastic, but there were ups and downs in it, but in the long term, it's worked out. This is only to January 19. Steve did a oh shoot, now I don't know where they are. Steve did a more recent study up to like 3 months ago or 4 months ago, and it was higher than 642. It's higher than that now. Because just a couple days ago, I hit an all-time high for the year in this. So anyway, with that being said, here was our trade. We bought here yesterday at 309.55, and we sold it at the open 310.98. It is higher than the open, but that's okay, right? That's our approach. It's just seeing if we can get that gap, and we did, and it's extremely high. So does that mean I'm not going to buy it this time? No, it does not. I'm going to have to buy it again today because I have to buy it every single day regardless of the technicals. But this was a fantastic trade, obviously, and I will be buying this again at the end of the day. All right, XLRE, very similar to Dollar Tree. I did buy this on the 13th of November. Really nice. Previous day we went under 30. The day that I bought it, we went over 30. You guys know that's one of my signals. If it closes under either intraday or end of day, and then intraday, if it closes back above, that's the signal. Or if it closes under, buying back above the next day. So we did have that under over, but to kind of make the trade even better, we closed under the third ATR channel, over the third ATR channel. You guys know that 90% of prices stay below the third ATR channel at the top. They stay above the third ATR channel to the bottom. If you're below the third ATR channel, it's generally a good idea to wait till it comes back into the channel, right? Not always. If you have other indicators or other things that are lining up, you may be able to take it. But this I like a lot. Under 30, over 30. Under the third ATR channel, over the third ATR channel. And to sweeten the pot, we have a beautiful V2. Here's day one. Day two washes out day one. Day three closes above day one. And in addition, I do like that we have, we stuck. We didn't go down anymore. We didn't go down anymore. Anytime you can get sidewards movement before you have a V1, V2, the better, for sure. And again, the only thing that would have made this trade better is if we would have had some type of support, some recent support. I mean, if I go back far enough, I'm going to find some, but ideally I'd like to see some recent support. Nope, it is up today. No profit target yet. Earlier in the day, it found resistance at the 1 ATR channel, and it found resistance at the 100. If we close somewhere like this today, I would consider just taking the trade off. Because it rejected a confluence of it would have rejected the downward sloping negative 1 ATR and also the 100. Whenever I have multiple indicators get rejected to the upside, it always concerns me. But as is right now, it is above the 100 and it is back over the negative 1 ATR channel. So as long as we hold there, I'm definitely going to keep this. If we closed under both today, I would consider just locking in the profits. The blue line up here is the 50 RSI. That's my initial target. If we reject that 50 and close under, I would go ahead and just lock in profits. But anyway, so far so good. It's been a good trade. And then lastly, just in case you guys are keeping score, I did a couple days ago sell some puts on McDonald's down to $180. Right now it's $193.66. As long as the price stays above 180 by December 13th, I'll be able to keep all the premium. If it goes down there and I keep the trade below that, I will be required to buy at 180, but I'll still be able to keep the premium. But I do this on 3 time frames. On the monthly, right in the middle of the channel, right? So the 20 SMA is right here in the middle. There should I should say there's potentially some support there on the monthly. On the weekly, the $180 price jives pretty nicely with the low RSI, and you have the 100-week moving average above you, which also should give you some support. But there, I shouldn't say should, could. So on the monthly, there could be some support at the 180. On the weekly, there could be some support on the weekly chart because of the 100-week moving average and the 30 RSI. And then on the daily, we're down here very close to the 6th ATR channel, which is extremely hard to reach. So anyway, that is why I sold puts on McDonald's. Currently, I think I'm about break even on these. Let me see. No, I'm up a little bit. I sold them at $30 a contract, and bid is 25, ask is 29. So that's going my way because I want it to go down. So that's it. So Dollar Tree looks fine today. No trailing stop yet. SPY, of course, we had the nice SPY trade. Going to buy that at the end of the day. Real estate is looking good. If it were to close back below the -1 and the 100, I would consider locking in profits. And McDonald's we just talked about. So that's that. All right. So listen, this is the time of the podcast that I do like to talk about trading psychology, how important it is. There's some really great Twitter channels out there that spend a lot of time and energy, burn a lot of calories, and I'm glad that they do, about, you know, good trading quotes, trading words of wisdom, things that are important, things to think about, things to internalize. And one of the best ones for sure is our friend Stephen Burns at @SJosephBurns on Twitter. But Steve says, the worst thing about a big loss isn't the financial loss, but the indecisiveness that follows. It's hard for scared money to make money. Position sizing is important. Do not let a loss take you out of the game financially or mentally. And I guess this came from @Ian Cassell. This is so true, guys. This is so super true. Yeah, taking a loss is no fun, but in the bigger picture, the harm that it can do is making you indecisive and scared to take the next trade. And, you know, go through your charts, do a simulation with no money, and if you run into a couple trades where you lose, even though it's not even real money, you're going to be a little indecisive to take that trade. Remember, Jackson, when we did ours in the lessons, you know, it wasn't even for real money, but, you know, I could just tell. Jackson was like, I don't know if I want to take that trade because we had 3 losers in a row. And I was the same way, trust me. But, you know, that's why it's so important to position size correctly, so that if you do lose, again, you don't get destabilized. And destabilization is going to make you do one of two things. One, make a bad trade, or two, not take a good trade, right? So this is so true, guys. The worst thing about a big financial loss isn't the financial loss, but the indecisiveness that follows. It's hard for scared money to make money. I mean, you have to put money at risk to make money, right? And if you're scared, you won't do it. Position sizing is important. Don't let a loss take you out of the game financially or mentally. So it just circles back to position sizing correctly, so that if you do take a loss, it's not going to, you know, destabilize you too much, so you don't want to take the next trade, because a lot of times that next trade is a big trade. You know what I mean? So all gets back to position size, guys. I know you want to get rich quickly, but it's not the way, because if you try to get rich quickly, you have to put on huge position size, and if you run into 2 or 3 losses, it's just going to mess you up. So, you know, if there's anything you can take away from this podcast, is 1, position size correctly. Position size for me is 10% of my capital. So if I had $100,000, I would only buy $10,000 worth of a stock, right? You're not going to get rich quick that way, but you are going to stay in the game. You are going to get experience, and you're not going to get destabilized. So thank you, Steve Burns. Really, really great saying. Okay. Greg, would you say XLRE had a 1 day sideways move before the washout? You mean this, Jackson? Yeah, it had a couple days sideways move, but I mean it's good that it did, but on this particular trade, it's not required. Required this the couple day sideways movement. Remember, is the return to value. This is a completely different setup where you go under 30, over 30. This is just a cherry on top that it was sideways. All right, where are we at? All right, well, Apple, just too high. Like always, it's a monster, just going up and going up and going up. Do we want to short here? No, don't want to short. Do I want to buy here? No, I don't want to short. I want to wait for a pullback into value, and look for a dip buy on this right here. It's just too high. Adobe also just too high. Very strong. It closed over the third ATR channel. That is extremely strong. But again, I want to wait for a pullback. I'd really love a pullback into the value zone that also coincides with the 200-day moving average. This would be a sweet place to buy this if it gets down here. If it just keeps going, well, and then it just keeps going. That's all there is to it, and we'll miss it. But in the future, if it gets down here into the value zone, moves sideways, ideally have a V1, V2 off this 200, be fantastic. Advanced micro devices, I mean, very high today, but this price action is not extremely bullish. We gapped up higher. We tried to go up. There are no buyers. It's now lower than the open. That's never a good idea. If I were long advanced micro devices, I would certainly consider locking in profits here. Doesn't mean it can't go up, but this is a bearish reversal bar at extremely overbought levels. So nothing here. Again, we'd need to wait for pullback into value. Amazon, my goodness, Amazon's just hating it, isn't it? I was actually, I put this line here in case we were up here, it came down and we started to reverse back up. Might have been a nice V1 rejection of the 1 ATR channel, but that is not looking like that's going to happen now. We're at 38.89 RSI. Down here at the 30 RSI, I would definitely be looking to buy Amazon down here. Ideally, if we could get some, because we have some support at this slow down here. If we could get back down here at the low 30s, depending how fast it got down there, and support over here, it'd be fantastic. Conversely, if it went up, the 5 crossing over the 50 is also a good back-tested approach on Amazon. So nothing on Amazon. Boeing, very, very strong. Did close above the 200 yesterday. Look, got rejected very close to the third ATR channel. This is just way too high for me, guys. It's just too high. If this one goes, it's just going to have to go without me. I have to stick to my rules and look for some kind of dip. Berkshire Hathaway, we just added that. V1 to the downside, in case anyone is keeping track of V1s to the downside. It's always good exercise to take a look. We got very extended, looking for a pullback into value, sideways movement, V1, V2. But, we always talk about V1s to the upside, but this is a V1 to the downside. Yesterday we had the high. Today we washed out the high or went above the high, and currently we are below yesterday's close. Would make this a V1. Doesn't mean I'm going to short it. Just wanted to point that out. Caterpillar, just too high. Need a pullback into value. It's really what we need. Dow Jones made an all-time high today. Extremely strong outside the third ATR channel, 74.71. Broken record, but I need to pull back into value. It's just too high. Doesn't offer me a good risk to reward up here. Doesn't mean it can't go up anymore, and it very well might. But for me, I just have to wait for my signals. I have to wait for a dip. Walt Disney, of course, a couple days ago, we had that huge move up when Walt Disney, was hugely successful with their Disney Plus. Nothing here, but the reason I drew this line, here's a huge big bar up, larger than 1 ATR. Remember, when you have a huge big up bar, it's possible that you're going to find support at the 50%, that it might come back down to the 50% of this bar. right? I had that trade on Facebook yesterday, something similar. A couple days it had gone up, then it had come back down into the halfway of this bar, and then I went to a smaller time frame and looked for an entry back up. But we'll see what happens. I mean, I'm not doing anything here, but I want to see. We'll see whether or not this halfway can hold. Etsy. So Steve took Etsy yesterday. His charts were a little bit different than mine. Yesterday, on his chart, it went above the third ATR channel or above the third Keltner channel. It's a 29.25 RSI right now. I would consider buying this on my charts if we could close above the 30. And if we closed above the 30, I believe we would be the third ATR channel. So we'll have to watch that one. Ford, nothing interesting there. Facebook, really nothing interesting there. Five Below, whew, look at this, guys. Big down day. I would be interested in Five Below. I mean, the most likely possible trade coming here would be a bounce off the 30 RSI or a close under the 30 and close over. Gold had this nice V1 here. I didn't take it, but it has moved up a little bit, not a ton. But at this point, I'm looking for a higher low V1, V2, like Monday. If we went lower and then reverse back up, that would be a nice higher low V1 inside the value zone. Gold, same pattern, but hasn't quite got to the 1 ATR into the value zone. Google, really strong day today. Just too high for me to buy here, I can tell you that. Right at the third ATR channel, I need to pull back into value. Goldman Sachs came back into value a couple days, up a little bit today, but nothing here. Home Depot, a bit of a reversal bar today, isn't it? We are still higher than yesterday's close, but right now the current price is lower than the open and rejected the 1 ATR channel. So it's not extremely bullish, but we have earnings coming up, so I'm not going to do anything with Home Depot. IBB, very, very strong, waiting for a pullback. Intel, waiting for a pullback into the value zone in between the two green lines. IWM, still too extended, but it looks like, you know, we may get down here into the value zone. So it's just important that I just have to sit on my hands here, be patient. If the market runs away without me, so be it. What else can I do, right? But at least I'm following my plan, but I'm just waiting for a dip. Johnson & Johnson, all right, this is just insult to injury, right? I did buy this here with the V1, did have some profit, did go up. We did phase out each day. It kept me in by closing above the previous day's close. Yesterday, it got to my entry point, and I have a rule when after I make some nice profit to the upside, if it comes all the way back to my entry, I have to get out. So I did have to get out yesterday. Didn't close below yesterday's close, so if I would have followed that rule, I would have stayed in and had this huge monster. Insult to injury, but yes, I did have to get out when I broke even yesterday. But all in all, it was still a profitable trade, and I think it's still a good policy after you have nice profits not to let them run into losses. But here we go, beautiful V2, day 1, day 2, day 3, day 2 washes out day 1, but obviously I couldn't buy it up here; it's too high. So yeah, that was just rude. Coca-Cola, nothing really on Coca-Cola. Lockheed Martin, look at this march up. Just freaking march up, right? Can't do anything. Need to wait for a pullback into value. MasterCard, it's kind of been dripping up. Be nice if we could break out to a new high. If not, we may make a lower low. So nothing on MasterCard. McDonald's, we talked about that. I have sold the put down to 180. Um, Altria Group is looking kind of interesting here from a short perspective. Here we have a high. See how high the move is in the MACD? Then we come back with the red. And Mert, if you're listening, this is the example. You sent me that example. But we need to go green to red, go back up equal or higher, and then have the divergence. And see how small this screen is compared to this screen. This is a massive bearish divergence. And at the same time, look what we have up here. Looks like we rejected the 250 and close to rejecting the 200. Also, look up here. This last high, we were at third, fourth, fifth ATR channel. Now we're higher. We're only at the third ATR channel. So this is what's called a bearish divergence. I'll tell you what, I do kind of like this trade. I think it gives a good risk to reward ratio, just with the close over the 200-day moving average. So let me quickly Dr. Elder says when it comes to looking at your charts, you really have to have it jump off the chart at you. And well, it did jump off the chart. This is a massive divergence. You have an ATR divergence. Look at the RSI divergence. See how high we are here with this RSI? Now we're higher, and look how low we are here. So I think it's pretty likely I'm going to take a short position on Altria today. Merck, nothing there. Microsoft, just too high, need a pullback. Netflix, big strong day today. Still range bound, nothing there. Nike, huge strong on the China news, I assume, just too high. Philip Morris, pretty high. Does not have the chart that stands out like Altria. PayPal, nothing there. Q's did go above the third ATR channel. Now it seems a little bit below it, but nothing there. Need a pullback. Silver, waiting for a pullback to the 30 RSI or a move up into the value zone with a higher low V1, V2. SPY, of course, we had the nice overnight SPY trade. Going to buy that again today. Bonds have had a nice rally under the third ATR channel, back over the third ATR channel. I'm waiting for a higher low V1, V2 at this point. Tesla, just very strong. Need to pull back into the value zone. This is a tough one on Twitter. We have a nice V2 here today. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. And we also close back in the value zone. The only problem is that we're at a 2486 RSI, which isn't totally a deal killer, everything considered here. MACD is positive. Let's look at the weekly. Yeah, I mean, obviously it has support to the downside. It hasn't been able to move it much lower. Not a lot of volume today. Did have this gap, but it did fill most of the gap. $50 RSI is up here. Halfway the washout bar would be here, so it does make sense. I kind of like Twitter. The V2, MACD's positive, back up into the channel. So okay. United Healthcare Group. Are you kidding me? What happened here? Holy smokes. It's too high. Oil, nice strong. Starting, looks like a nice higher close over the 200. VIX, by the way, I got out of VIX yesterday. Good thing, right? Under the 30. Can you believe this? So I'll wait for 30 back over. Back over. Look at this. This is unbelievable. Oops. Verizon, nothing there. Walmart, everybody wanted it. Nobody wanted it. Nothing on Walmart. It's a V2, day 1, day 2, day 3, but it is a gap. Too high. Our real estate's doing great, so that's good. Get up there and hit that profit target. That'd be good. Utilities and healthcare. So, all right. Etsy would be a buy if we had a close over 30. I don't know if it's going to get there. Altria. Yeah, I think it gives a decent risk to reward ratio there. I'd like if it rejected. It did reject the 200. I don't think, let's see. High 47.91 did not quite reject the 200-day moving average. Okay, I'm just gonna wait. I'm gonna wait until we can get a close above or close under a rejection of the 70. But I do like this. I do like this bearish divergence right here. High pullback, higher high, massive divergence, massive RSI divergence, massive ATR divergence. But I'm just going to be patient one more time, and if we went over the 200 and over back under, I would go ahead and take that, but I'm going to be patient. So it looks like the only thing I really will be looking at today will be Twitter with this sideways movement, nice V2, sideways movement, nice V2, close back over, risk to reward makes sense. Okay. XLR, he's screaming up there, isn't it? Oh, Dollar Tree went negative on us. Boo. All right, but Dollar Tree's fine. SPY buying at the end of the day. XLRE doing great. McDonald's rallying. That's good. So it looks like to me the only thing that's possible today is Twitter. Okay. And I'll get to these comments after the market closes. I just want to look and see if you guys have a couple potential ones to look at. So Jesse Cree, I mean, we came into the value zone, but you see we had some sideways movement here, but then we went down. So this does not really, to me, qualify as sideways movement. It's more up, down, sideways, and then a new leg down. Yes, we have a nice V2 here. It did gap, but it did close the gap. It's above 50. For me personally, it's a little too high up near the 1 ATR channel, Jesse. Let's look at the weekly. Yeah, I mean, it's good that it's holding above the 100, but me personally, I don't think I would take this trade. I mean, it's good. It moved over all the moving averages. It does have a V2, but I didn't get any sideways movement. My guess on this is this might bounce for a day or two before it comes back down, but that's just my opinion. Bill, how you doing, Bill Richardson? I got a nice profit from a put debit spread on Disney. I was looking in that bar too. Good job, Bill. Steve says, this has been a trend follower in investors market more than a swing trader since November. We need more volatility with pullbacks. Yeah, Steve, you're right. I mean, the way I trade and the way we trade, we need more pullbacks for more swing trades. This has just been kind of a one-way train that's hard to get on. Great for trend traders, though. Amon Solo, good to see you. Thank you for coming. Greg, in a situation like Apple, would you ever consider getting in with a small position with a very tight stop? Majority of daily bars are pretty small in size just for a chance to ride the wave. Probably not, Jesse. Not me personally. I wouldn't. Um, but if you did, you would really have to have a kind of a tight stop. I mean, one way if I wanted to try to go with Apple is I would just wait for a close below the third ATR channel or a close below the 70. If you thought that was going to keep going, would you consider full position on MO, Greg? Well, it's above the 200 day, so if I'm short, I'm going to take a half position, but I don't think I'm going to take it. I don't think I'm going to take it. At the end of the day, if it closed above and then closed below, if it went above and closed below, it went above 70 above, I would probably take a small shot at it, but I don't see that happening yet. But yes, I would take a small position. If I'm long and I'm under the 200, I'll take a half position. If I'm short and I'm over the 200, I would, oh yeah, well, no, I take that back. If it went over the 200 and under the 200, yes, then I would take a full position. Sorry to mess you up on that. But yeah, if I took the short position under the 200, I would take a full. Amon Solo, let's look at MYOK. Well, it's a nice V2. It's just that we have the 50 RSI up here and the 50-day moving average right above, which is a little concerning to me. Halfway of the washout bars down here. The 50 RSI or 50 RSI is going to be quite here. I honestly, Mansell, I don't think I would take this. I don't like the risk to reward. All right, so I need to figure out what I need to do here. 2 minutes. SPY, going to buy that at the end of the day. XLRE is doing great. Oh, get up to that profit target. MCD. Etsy doesn't look like it's going to close above. MO. Twitter. All right, I am going to go ahead and step in and buy Twitter. Half position under the 200. Okay. Let me do that one manually. Okay. So that is all taken care of. And what do we have? 4 seconds, 3 seconds, 2 seconds. Okay. So I did buy Twitter at 29.28. And I did buy SPY at 311.79. All right, so our dollar tree up 9 cents. Our new SPY trade at 311. Unbelievable prices. 0.79. Okay, that's our new SPY trade. The fourth ATR channel. And then Twitter. We got at 29.28. Okay. So going forward, Dollar Tree has not moved one ATR away, so I'm not instigating a trailing stop. SPY, of course, that's just the overnight SPY trade. XLRE, look how close we got to the profit target today. Dang, so close. Oh well, okay. We are more than one ATR away from my entry here, so at this point I am going to start instigating a trailing stop, like a close below the previous day's low or a rejection of the 50 RSI above. McDonald's, that's just the thing there. And then Twitter. So Jackson, if you're listening, so initial profit target is going to be the 50 RSI. So that's way, way up there. Somewhere in this range. The stop is going to be halfway of the washout bar. Yesterday was the washout bar right about here. But I do have to consider if we go up and reject the 30 RSI. Remember that 30 RSI is usually support underneath us, but if we reject the 30 RSI to the upside, that would probably be an instance for me to just take off the trade if I'm wrong. So that's kind of how I have to view that. If you guys have questions about that, let me know. But I did like this V2. I like the sideways motion. I did like the rejection of the third ATR channel back into the third ATR channel. The V1, I do like that MACD went positive. And Twitter, knock on wood, but it has been able to hold down here pretty well. Maybe not so much upside, but it has been able to hold pretty well to the upside, to the downside. Sorry. All right, so that's it. That is it. So get to more of these questions. Before I do, I just want to put in my quick daily plug. Let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I do offer a course. It's one-on-one with me on Skype. It's live, interactive. There's 5 sessions, and it's approximately 2.5 hours each session. So I think you get a lot of value for the money. It's $1,000 for the course, but I do put a lot of energy into it, and it's pretty intense. So I think it's definitely a good investment. You know, I teach during the first part of the lesson, and then I ask you questions. In the second part of the lesson, we analyze a lot of charts. I have you break down a lot of charts. You know, what are the positives? What are the negatives? What's the risk to rewards? All that kind of stuff. And by the time you're done, you should have a pretty good understanding and context of how I trade and how I view the market. So if you're interested, please reach out to me. You can reach out to me on Twitter, or you can reach out to me on my email, which is in the description of this video. And you know, before we decide we're going to move forward doing the lessons with each other, I do like to have just a free like 30-40 minute conversation with you, get a better understanding of how you got into trading, why you got into trading, what your challenges are, you know, what your goals are, what your personality is, so I can create a lesson plan and a plan for you that kind of fits all those criteria. And then of course you can ask me all the questions that you want to ask me too. So if you're interested, you've been thinking about it, this is a good time. So you know, reach out to me on Twitter or my email, which is in the description of the video. And then if you have not subscribed to this channel and you know you think it's valuable or you're learning something, please do me a favor and hit the subscribe button. And also, if you like today's podcast or live stream, whatever we want to call it, if you could hit the thumbs up button, I would really appreciate that as well. It helps build the channel. There's a lot of people that need some good advice or some good teaching of trading principles. And I think if they come to this channel, they're going to get that. So you can help me help them by hitting the thumbs up button and or sharing it on social media, possibly as well, right? So, all right, that's that. And do want to remind everybody, here is the podcast with our friend Steve Burns being interviewed by Christopher Uhl. And so I am going to listen to this today when I go hiking. Really looking forward to that. One of my favorite topics, risk management. So really looking forward to that, and you guys should check it out. And I put the link to this podcast up higher in the chat. So all right, so let me go back through here. Okay, we did talk about oil. Oh, while I'm thinking about it. All right, let's take a look at Murray's chart here that he sent. Okay, so looks like Murray shorted when we lost this trend line here. Boom, shorted 2, boom. Close short, went long 4. Look at this, perfect. I mean, this is textbook perfect. This is absolutely perfect, Murray. Are these hourly bars, Murray? Oh, I cut those off. I'm not sure what bars. I know these aren't dailies. I don't know if these are hourlies or half hours or 5 minutes. Okay. All right, we talked about that one. We talked about that one. We said hello to Marco. Hey Bing He, how you doing? Good to see you, sir. Thank you for coming. Bing He is our friend from Singapore. Hope you're having a good day over there. Frank says the SPY trade is actually very liberating. It turns you into an overnight trader. Yeah, it kind of does, doesn't it? I really like the SPY trade, Frank. Jackson says, regarding SPY and other aspects, I like that I must sleep through much of the U.S. market. It really makes me think of strategies unemotionally. U.S. market opens at 1:30 a.m. here, and I wake up around 6:30. Yeah, that's a really good point, Jackson. It's good to stay out of the market during the daytime. It's just good. You're going to be more impulsive, and you're just sleeping on through it and waiting for the end of the day, waiting for really what the valid prices are. You wake up about a half hour before my podcast. Christopher Hitchin, what is a V1, V2? So Christopher, let me grab a link for you. So V1 and V2s are, I have a video on YouTube. It's free, and I'm putting it in the chat right now. But essentially a V1 and a V2 it's a rejection bar. Well, here we go, Twitter. And it uses 1 bar or 2 bars, but you see how we have this day here? Here is day 1. Then we go lower than day 1. We wash out day 1. The next day we close above day 1's close. This is called a V2. If this day here would have gone below this day and then closed above the close, so here's day 1, day 2 goes below day 1. If it had gone below intraday and then closed above day 1's close, that would be a V1. A V2 means if you have day 1, it washes out day 1 but doesn't close above day 1's close, and then the next day, day 3, closes above day 1's close. So Essentially, the reason why these are important is because it shows that the market went below that day one bar, did not like it, and immediately reversed back up. And so it's important information to know that the market just recently didn't like that price. Doesn't mean it can't go back there, but it means that it already tried it and didn't like. So if I'm going to take a position in something, I would rather have it show me that it rejected, that it tried and rejected. So, I mean, that's kind of Cliff Notes version. But they're a huge part of how I trade and how I enter my trades. I learned that from Kerry Lavorne, but I did put that lesson in there. So my advice would be to watch that lesson, Christopher, and I spend more time. It's about an hour long, so take a look, watch that, and then let me know if you have any questions. Jackson says, would you say XLRE had 1 day sideways before the washout? Okay, so we talked about that. I would say we had 2 days sideways because we went down. The next day did go a little lower, but closed above, and then the next day held that. So yeah, I would say it had 2 days, 2 days of sideways movement. But again, on this particular trade, it's nice to have, but it's not needed because we went under 30, over 30, under the third, back over the third, and had the V2 as well. Murat, there is a shortage of pork in China since they lost half of their stock. In 1 year, pork prices went up 100 due to demand and shortage. It puts big pressure on inflation. China wants to buy it from the U.S. since it helped both sides and ease the trade dump. Trump wants to create more market for American farmers. China wants to push the pork price down, beneficial for both. Okay, and then Jesse, we talked about Cree. Yeah, we did go above. We did move sideways for a little bit, but then we kind of had another leg down. So I don't think the risk to reward's all that hot, to be honest with you, because halfway the washout bar is here, Christopher. If you're watching day one, day two washes out day one, day three closes above day one's close. But it's better if you have sideways movement before you have this. So did you take that, Jesse? Jackson says, just looking at the sideways is an extra confluence. Okay, great. Glad to hear that. Perfect. I'm glad you're thinking that way. Murat says, if Newton is right, all apples fall down 1 day because of gravity. Okay, and Bill, we talked about your put debit spread on Disney. And then we talked what Steve said. This has been a trend followers and investors market more than a swing traders market. In November, we need more volatility. Yeah, I was reading an article about the difference between hedge funds and basically just ETFs. And this year, ETFs are really outperforming all hedge funds by a huge amount. And, hedge funds are more swing traders, essentially technical traders, and the ETFs on this huge big run up are just going to outperform them. Okay, and then Jesse, we talked about the situation like Apple. Yeah, obviously it would have been a great idea, but at the very least, if you just want to get into Apple, I personally wouldn't buy it up this high, but if it closed below 70 or closed below the third ATR channel, at least you have a plan, right? And Jackson said, would you consider a full position on MO? Yeah, I would, because we didn't test the 70. But if I'm under the 200 day and I want to go long, I take half position. So conversely, if I'm over the 200 day, I would want to take a half position if I were short. But I decided not to take this. Big confluence here. Massive bearish divergence. Massive ATR divergence. Massive RSI divergence. But I just passed. I just passed on it. But if I had shorted it and it was under the 200, I definitely would have taken a full position because it was under the 200. Then we talked about this for a man solo. It's a V2. Here's day one. Day two washes out day one. Day three closes above day one's close. But it looks like it rejected the 50 RSI already, and that honestly would have been my initial profit target. So I don't think I would take that. Steve says VIX pressed 12. Look at that. Look at that. All I do want to point out, we're talking about double bottoms with bullish divergences. Here you have a bottom with deep red MACD bars. We did go green. Now we are lower and we have no red. So that is what Dr. Alexander Elder calls a missing right shoulder, which is even better than a double bottom with a divergence. So, you know, the way Dr. Elder would view this would be somewhat bullish at some point. Evan says, can we look at ATVI and WM on your charts? I have positions in both and would like to see them with your indicators. Sure, you bet, Evan. Oh, yeah, we talked about that. I think you bought this yesterday, Evan. Was that right? I think you bought it. Yeah, I don't think you bought it here. I think if I would have bought it, I think this would have been my place because it had a V1. Christopher, if you're watching, day one washes out. Day two washes out. Day one closes above day one's close. But I believe you bought it yesterday. I'm glad that it moved into the value zone. You know, if this was me, Evan, I'd be, you know, waiting to see if we reject that 50 RSI above us, probably up in this range. So, you know, you might want to consider if it goes up, rejects that 50, that, you know, for me, it would be a place that I would probably lock in profits. And then WM. Ho ho. Oh, that was yesterday. But still, here's Walmart or Waste Management. Sorry, Evan. I hope this helps. I'm not sure where you bought this. Actually, this would have been a nice little entry right here. Higher low, V2 into the value zone. We went down, we came up, we pulled back day one, day two, washes out day one, day three, closes above day one into the value zone, giving yourself a good risk to reward, 200-day beneath you. Did this get up to 50 RSI? Yeah, so me, I guess personally, if I had been in this trade, I probably would have gotten out at the end of the day. Because we went 30 up to 50, rejected that 50, and then closed back below that 50. So, you know, the 50 RSI, if I'd have been in this trade, it would have been somewhere like here. If it had gone up, closed above the 50 RSI, I would have kept it. But because it rejected the 50 RSI and closed below, that would be my place to exit the trade. Murat says hourly. Okay, so these are hour bars. These are hour bars. Wow, what a break. What a break. So impressed with the reversal here. Man, you've had some monster days, Murat, on oil. Congratulations. Bing He says, I was using TradingView to study Keltner channels. It makes a lot of difference with SMA and EMA settings. Plus, the ATR can also be set using different method. Yeah, I've always used SMA on my Keltner. I mean, listen, if you want to use EMA, totally fine, just as long as it's you stick with it. You know, whether your chart's adjusted for dividends, not adjusted for dividends, you're using an SMA, EMA on your Keltner channels. It doesn't matter. It doesn't mean mine's right, yours right, mine's wrong, yours wrong. Just make sure you stick with what you use. Bing He says, since there are a few versions of Keltner settings mean different mean different group of traders. We have to follow the majority. TA becomes complicated. Yeah, you're right. I mean, as far as indicators, you want what the majority use. That is true. And I would say the majority, on your 200 days, all that kind of stuff, use dividend adjusted. That's why I use dividend adjusted charts. But some people don't have that ability to have that option. Apple says, Frank says, Apple, I agree with Jim Cramer. Own it, don't trade it. Well, absolutely. Apple has been a monster. Murat says, Greg, Apple was the apple. Apple was the apple, and it will eventually fall down. You always talk about stretching the rubber band. I use gravity analogy for stocks going too far. Yeah, I agree. I mean, things don't go straight up, do they? And now I get it. Apple and the gravity and Newton. Okay, I was a little slow. Now I get it. Nice one. Touche. Clever. I like it. And Evan, okay, so Evan bought that yesterday. Bought ATVI, I believe. Yeah. 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 I remember that. All right, well, listen, we had a pretty nice day, right? All three positions were up. Dollar Tree, not up much, but it was up. SPY had a really great SPY trade. And XLRE is fine, really good. I'm going to be keying in on this 50 RSI now for a place to possibly lock in those profits. Hey, Wayne K, good to see you, sir. Buffett says, taking more position. In what, Wayne? Is that Apple? A man soul will say, when you say dividend adjusted, that's just for special dividends, right? No, on charts, you have the ability to have the price bars open, high, low, close with the dividends that they paid taken out. And on a lot of charting softwares, you have the ability to see the prices that are dividend adjusted or see the prices that do not have the dividends taken out. And it will change your readings, it will change your moving average readings. Let me just give you an example. So here's SPY. Mine are dividend adjusted. So the moving average is 281.71. So let me write that down, 288.71. Now, if I go in here and adjust, now it goes to 290.59. And some platforms don't have the ability to adjust back and forth. So it doesn't mean you can't use 290 as your 200-day moving average reading, but that's without dividend adjusted. So I'm going to switch mine back, uncheck, and then it moves it back to 289.71. But whoever your charting is, I would take a look around there, maybe call in and say, I'd like, is there a way for me to switch between dividend adjusted prices and undividend adjusted prices? Dr. Long says, check EMR. So we did pull back into the value zone. I don't see any sideways movement here though, Doc. We did bounce here, which is good, but I would rather take the price in here. We did gap on this as well. I think there's a high likelihood that this may continue up higher, but then come down. If we go up, go down, move sideways, build a foundation, then it's easier to move higher. But when you go up, you go down, 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 and immediately back up, that's more likely to fail. Jackson says, I'm gonna listen to that podcast on my walk today. Looking forward to it. Me too, Jax. Me too. Long 74 puts at 50 cents. Well, I hope they go. Oh, puts. Okay. Okay. Well, I hope that goes your way, Doc, for sure. Wayne says yes, sir. Okay, so that was Apple that Buffett was talking about. Frank says, Murray, even a broken clock is right twice a day. A man solo, got it. Got it, thanks. So far, I have been adjusting for special dividends. We'll look to do for all dividends. Correct. Yep. So yeah, good day today. Everything was up here, so I'm grateful for that. Gonna have to watch that Altria. Boy, I mean, there's a lot of divergence going on here. But going forward, if we go above 70 and then back below 70, that might be one of my shorts. I think I've taken 4 shorts this year or 5 shorts this year. Can't remember. Anyway, I'm glad I didn't take that. There wasn't enough confirmation price wise. It was too anticipatory. But if it rejects the 200, then that's not anticipatory anymore, and it gives a good risk to reward ratio. And so our new entry here is on Twitter. I do like the sidewards movement. I mean, this base it's building could lead to a big move. Unfortunately, it could lead to a big move to the downside, but at least we know, our stop is tight here. I'd like to see it get over that 30-day. If it rejects the 30-day and closes under, I'd probably just go ahead and get out. If it goes up, holds above the 30, then I would keep it and then use that 30 as my trailing stop. So 2 things. Steve and Chris's podcast right here, and I have a link in the chat, and then Steve's new book, his most recent book, The Ultimate Trading Risk Management Guide, and I think that's what they're going to be talking about on this podcast. Okay, guys. Jackson says, and with MO, the 70 and 200 is lining up nicely. Should it go that way? Yeah, I agree. I mean, that's what I noticed too. I'm glad you're noticing that, Jackson. Jackson's just finished up with his lesson, so he's noticing these confluence. But yes, I mean, the 270. If we wanted to go long and we had a 30-200 dip, we'd be interested. So to the upside here, a 70-200 is also a possibility for short. A man solo says, can you look at PINC? Yes. Well, we had this big bar up. Remember, now on these really big bars up, it's likely that it might come back to the halfway. It should hold some support if we came back to the halfway. I would personally rather wait and see if we could come back into the value zone, and at the same, because right here in the value zone lines up with 50% of this Fibonacci number on this big bar. It would be too high for me to buy here. It looks like we do have support of the 200-day, but if you have a big bar up, more than 1 ATR, you should have some kind of support if you come back to halfway. And if you take halfway here, extend it over here, we're right here in the value zone. So that's what I would wait for. I would wait for a pullback into value, then some sidewards movement in a V1 or a V2. Bing He says, for the MO short, do you think it is luck that caused you not to short it, or is it psychology? Well, no, I don't think it's luck. It was looking at it looking good, and then, well, I guess psychology into the fact that I had to look at it even closer and more analytically and say, okay, we're at a 70 RSI, we're at 200-day moving average. 250-day is hidden in there as well. We have the bullish divergence, we have the ATR divergence, we have the RSI divergence. But what I wanted to see is I wanted to see it go above the 200 and then below the 200, showing me that it just tested those prices and rejected those. But you can see the 200 is 47.95 and we are now at 47.97. So it did close above the 200-day moving average. Yeah, I mean, just upon closer review, it didn't give me the signal. If it had gone, if it had done this, if it had gone up like this and then closed below here, then that's more confirmation that it already wanted to go up to these levels and didn't find any more buyers, and then close below. Then it gives me a nice close stop if I'm wrong. So that's what I'm going to wait for. If it went above 70, came and above the 200, and then came below the 70, below the 200, that's where I would take my position, my short position. Dr. Long says, I show different price EMR. It broke hard at end of day. You don't show 73.53? I'm looking over on my broker and it shows 73.53. So these two do line up. You're seeing something else? Being he said it, it's like within split second you decided not to short it. Yeah, I just thought to myself in that last split second that I didn't see enough of a rejection. That's why at the last second I decided not to short it. 72.52. Yeah, I mean, I see 73.53. Are you looking after hours maybe? No, after hours is the same, but I'm looking at my broker. It also says 73.53. I'm not sure. Maybe you had a bad tick. Yeah, I'm looking after market also. I don't see. Oh, look, the bid is 72.50. The ask is 73.53. Maybe somebody hit the bid. Does that make sense, being he, why I decided not to short it at the end? It would be like if we had a deep dip buy. Let's see. It would be like if we got down to the 100-day moving average and it was a 30 RSI, we had a divergence, and me saying, I'm going to buy this, and then at the last second saying, no, I'm going to wait to see if it can go down and then back under like I did on Dollar Tree. I remember looking at Dollar Tree with one of my students, and she said, would you buy that? And I said, I probably would not. I'd probably like to see it go down and then back up. So same on this. It's very similar, but a short position. I'd like to see it go up and then go back down. Does that make sense, Bing He? Jackson says, yeah, it closed above 200 SMA on my chart, and would be nice to see it also go above the 70 RSI, then close under. Yeah, exactly, Jackson. Perfect. Yep. You're starting to get this, bud. You're starting to get this. The confluence, the combination of signals. Oh, you're on IB. Okay. Yes, your mind is very, Bing he says, yes, your mind is very clear. Maybe certain mind to do well in trading. Mine is usually very cloudy. If I am you, I think I would have shorted it. Maybe it's FOMO. Well, I did get a little excited about this. I mean, let me break this down to you guys one more time. Do you see this previous high? Do you see how we're at the third, fourth, fifth ATR channel? That takes a lot of momentum to get that high up. Then we came back down. Now we are higher than this high. But do you see how we're only at the fourth ATR channel? So 3, 4, 5. This is at the fifth ATR channel. This is at the, second ATR channel. This is at the fifth ATR channel at this high. This is higher now at the second ATR channel. So it's a lack of momentum compared to this move. RSI, you see how high RSI is here? Well, now we're higher and RSI is lower. That's a bearish RSI divergence. This is a bearish ATR divergence. And then if you look at the MACD divergence, you have the high. Look how strong this was. Now we make a higher high. Look how anemic this little guy is right here. So listen, it could go down and I would have missed it because I wanted to be patient for one more day, but I'd rather have more confirmation. I'd like to see the market tested up here. If it keeps going, then I don't short it. You know, if it tests and comes back down, then it gives me a really good risk to reward and a clear line, demarcation line of where I'm right and where I'm wrong. Jackson says, I must admit, in those last few minutes, it's hard. I set up manual orders but not active, and a little post-it note to remind me, if it closes below this, then do this, just so I don't push the button prematurely. Yeah, I do the same thing. I write down, like I have an idea what I need to do, but I literally write it down in front of me because those last few minutes, everything gets, you know, a lot of things are going on and you don't think as clearly, right? And I'm doing the podcast and speaking too, so I have to, you know, I have to concentrate on that as well. So very good, Jackson. It says MJ, so, but yeah, very, very good and good advice for everybody. You know, if you have several positions that you're considering, write them down so at the last second, you know, when the heat's on, that you can read something that you wrote when your mind was clear. All right, guys, I'm going to get out of here, go for my hike, listen to the podcast with Christopher Uhl and Steve Burns. So Jackson, thank you for coming, doing really great, really great comments today. I can see that to me, it really seems like this is coming together for you, how you're looking for these convergence. Bing He, thank you, sir. Have a good day in Singapore. Have a good weekend. Dr. Long, good to see you. Thank you for coming back. I appreciate it. Aman Solo, great seeing you. Hope you come back. I said goodbye to Jackson, right? Yeah, I said goodbye to Jackson. Bye, Jax. Murat, thank you for coming by. Fantastic oil trade you've had lately. Outstanding. Outstanding, man. I really admire that and hope you have a nice evening in Norway. And Frank, great to see you. Thank you for coming by. Wayne K, good to see you. Hope you have a good weekend and enjoy the weekend. Evan, good to see you. Thank you for your comments and hope I could help with some of those questions. Steve Burns, my hero. Thanks, Steve. Looking forward to that podcast, and thanks for everything you do. Thanks for your website, all your great Twitter posts, all your great books. You know, the huge impact you've had on my trading. So I can't thank you enough. So say hello to Holly. Give the dogs a pet for me. Jesse, good to see you. Hope you have a nice weekend. Please stay safe out there. Keep me up to date on your positions. Bill Richardson, nice to see you. Thank you for coming back. Appreciate that. Christopher Hitchens, I did post that link to my lessons on the V1s, V2. They're free. They're in YouTube. So check those out, Chris. Let me know if you have any questions. Marco, good to see you, Marco. I know one of these days Marco's going to ask me a question, and I hope I know the answer. But have a good evening in Europe and Slovenia, and thanks for coming. Appreciate it, bud. And John, I did add BRKB to the watch list, so thank you very much. I think that's a good choice. All right. Mert says, take care and have a great weekend. I agree. Hope everyone has a good weekend. Go out and do something nice for somebody today or this weekend. Be safe, and hope to see everybody back on Monday. All right. Take care, everybody. Bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.